Welcome to Ask Jackie. Today we're going to be focusing on first-time homebuyer mortgage questions. And our special guest today is Dan Zorgel with the Mortgage Center. Welcome, Dan.
Thank you.
My first question for you today is, if I have good credit and I have a good job, why would I come to a mortgage broker? Why wouldn't I just go to my bank?
Well, it's a great question, Jackie. Many people do try that method. They just go into their own bank thinking, well, I should be able to negotiate my own mortgage. And you can try that, but chances are you won't end up with the best rate and probably not even the best product that would suit your family and your lifestyle.
So as of February 1st, I heard that down payment rules are going to be changing. Can you explain how this would affect a first-time homebuyer?
Well, probably not much at all, because the rules regarding down payment are only really affecting purchases above $500,000. So if your mortgage is less than $500,000, you just have to have 5% down. For those that are purchasing or maybe qualifying for houses a little bit more than that, you have to have the first 5% of the first $500,000, and after $500,000, you have to have 10% of that portion of the mortgage. To further explain the new regulations regarding down payment, we'll take a couple of examples. In the first scenario, a $500,000 purchase, a couple would need the traditional $25,000 for a down payment, which is 5% of $500,000. But a couple that is purchasing a home for $600,000, they would have requirements a little bit more than 5% of $600,000. They would need 5% of the first $500,000, which is $25,000, and they would need 10% of the remaining $100,000, which is an additional $10,000, making a total of $35,000 for a down payment.
So Dan, can you tell us the biggest advantage of using a mortgage broker?
I think the biggest advantage is that we're on your side. We are fighting for the best deal that we can get for you. So we will take your application and we will shop your application to various lenders to get you the bottom rate.
Including probably the same bank that they're already dealing with, right?
That's right. We've often found that we can get a lower rate at our client's own bank than they could have got by negotiating themselves.
Is there any other advantages?
Oh, of course, there's tons of advantages. One of the primary advantages is that we only pull your credit check once. We pull a credit check once and it's good for 120 days. People who shop their own mortgage will often go from bank to bank to bank, and each time that they go in asking for their bottom rate, that bank will pull another credit check, and it will have a cumulative effect of lowering their credit score.
I have actually seen that happen where people have gone around and shopped for mortgages, and at the first bank they were qualified, and by the time they've gotten to the fourth bank, it's drastically changed their credit score and they did no longer qualify for a mortgage.
Yes, which is a serious risk.
What if I have good credit and a good job, but I just don't have a down payment? Is there anything you could do to help in that situation?
There are other options out there. We used to have 100% financing. That particular program does not exist anymore, but there are other options. You can get your down payment gifted from immediate family. You can actually even get the closing costs gifted to you. You can, if you have RSPs saved up, you can access your RSPs if you're a first-time home buyer and use your RSPs for your down payment as well as your closing costs. And finally, we even have a few institutions that will still allow you to borrow your down payment from an unsecured credit line.